When you think of stretch, STRC, think STR means strong and C means credit, right? Stretch is strong credit, targeted to the credit markets, to a very particular type of credit investor.
And what's happening, Crypto Crew? Sean's coming back at you in a cryptocurrency video. We're getting straight into it. There's a lot going on. You don't want to miss this. First update, MicroStrategy keeps stacking. Saylor and team don't stop. The Bitcoin count is over 600,000, 777 0. 607,770. They keep stacking. How quickly will they get their next 100,000 Bitcoin? Michael Saylor's been up to a lot. Looking at the MicroStrategy price at the current time of this recording, what do we see? What do we anticipate? We still feel like this potential flag pattern is playing out, and we've showed you this before multiple times. I'm not sure why my line got moved, but basically, come in, trade in this channel, breakout. We didn't get a back test. Came into another little small micro flag pattern, a breakout. The next level to pay attention to the upside be $580 to $600. Ultimately getting up to this technical target up to around $1,150. Now remember, it's not just going to go straight up to it. We could come up, blast up, trade down, have a next leg up, trade sideways, have another leg up, trade sideways, and then have that parabolic peak up towards that target. That's what we could see. This is MicroStrategy on the 2-week, and we're seeing that no bearish divergences are coming in play, and we're actually seeing this uptick. We closed at 426. We'll see where the next few months leave us. Michael Saylor and team had a call today, and they're explaining their latest preferred offering, Stretch. You don't want to miss this. This is revolutionizing Bitcoin into the traditional finance space, giving actual dividends with little to no downside risk, giving that 9% return every year in perpetuity. Check out what Michael has to say.
Now, looking long term, and long term for us is, 3 years out, we're really thinking about a capital structure where Strife would be at the top. And we would be targeting a BTC rating of 10 or more. And Stretch would be second. But we're also targeting 10 or more. We want these to be our highest rating, our highest rated, most secure, most over collateralized BTC credit instruments. The mezzanine instrument would be Strike with a BTC rating of 6 or more. The high yield instrument will be Stride with a BTC rating of 3 or more. All of those credit instruments will be supported by Bitcoin, our Bitcoin stack, which is the hard asset, which is liquid. And they'll be also supported by our equity in the equity capital markets. And so you can see that's our long-term BTC capital structure. When you start to crank that in and you think about what's the plan, you can see that our ability to issue credit, it'll be a function of the appreciation of Bitcoin. It'll be a function of the increase in our equity capital base. It'll be a function of the issuance of the junior instruments as we issue more Stride. That will actually make Stretch and Strife more creditworthy. So there's a lot of opportunity here, and all of these instruments are very reflexive to each other. The issuance of one generally results in an improvement in the prospects of the others. So I've laid out our capital plan and our credit strategy here. You can see our long-term targets for the 4 instruments in the credit structure. Our plan is that we'd like to reduce our overall senior convertible debt outstanding over time, and we'll seek to equitize that as the options arrive and as available, and we'll simplify our capital structure in order to elevate the BTC ratings of the remaining credit instruments. as we move forward, preferreds are our preferred credit instrument, and they'll remain perpetual. We think that keeps our flexibility, maintains flexibility, but also minimizes default risk. It's just best for our credit strategy. And then we're going to time our future offerings, and we'll size them to maintain our target BTC ratings and to preserve our tiered risk and yield integrity across the stack. And our business strategy is we want to be the leading issuer of BTC-backed credit instruments in the world. We are now. We don't see any reason why we shouldn't grow that business and continue to be the leader in that market. We'll do it with very clear credit standards, a disciplined approach to leverage, and very transparent capital allocation. Our goal for Stretch is we're targeting low volatility, short duration, high yield credit, right? Stretch is meant to be strong credit. It's for credit investors. They don't want long duration. They don't want volatility. They want the highest yield they can get if you can diminish the volatility and shrink the duration. How are we going to do that? Well, we're leaning on 4 pillars. MSTR, the issuer, has a 35-year track record. We're a well-known, seasoned issuer. We have $100 billion plus equity market cap, $100 billion plus options open interest. We have nearly $5 billion a day of equity liquidity. So a very well capitalized, seasoned issuer. We're also focused upon our digital capital strategy. So digital performance is really important. That's how we're going to generate the yield on these instruments, right? And the performance comes from Bitcoin, which has been appreciating 59% a year for nearly 5 years now. MSTR is appreciating 104% a year. So we are the bridge to the crypto economy. And as the crypto economy grows and the digital economy grows, we expect Bitcoin performance to continue, and we expect that will drive MSTR performance. And we expect that will be how we will fund and back these credit instruments. We're executing a treasury operation. That's the third prong of our Stretch support, right? We've got 4 ATMs right now. We're going to add a 5th ATM as soon as practicable with Stretch. We've issued $35 billion of securities over the past year. And we've got a 5-year track record issuing these securities into the marketplace. And so our treasury team will support Stretch, and we expect that's one of the elements that will make this strong credit. And then finally, the credit of Stretch itself is backed by 607,770 Bitcoin, right? The largest corporate Bitcoin stack, unencumbered Bitcoin that we can use as hard collateral. That gives Stretch a BTC rating of 7, on the IPO, and that means 7 times over collateralized. So when you think of Stretch, STRC, think STR means strong and C means credit, right? Stretch is strong credit, targeted to the credit markets, to a very particular type of credit investor. And it's unique in our credit stack. It's not like Stride. It's not like Strife. It's not like Strike. It's not like the equity. We think that we're bringing a very elegant and exciting product to the market. We hope that you'll agree with us.